Stocks are not lottery tickets. There's a reason behind why the stock goes up and why the stocks go down. Let me give you some example in the real world. One stock that I like investing, and I've been investing on this stock for the past 4 or 5 years. Southwest Airlines. The code is LOVE, L-U-V. When do you think I purchased? When do you think the stock is up? Very high up. When are the times that on the holiday season, around Thanksgiving, around Christmas, the stock is very high up. But what do you think happens to the stock around January, February? It goes all the way down. Until when? Until spring break. And every single year I make a profit with Southwest Airlines. Now I'm not telling you you have to invest in Southwest Airlines, I'm just giving you an example of how actually you can start seeing the patterns. Campbell's soup. When do you think the stock is going to be up? In the winter. When do you think the stock is going to be down? You hold the stock for 6 months, you make a profit. Is that simple? Absolutely. All you need to do is start understanding that you don't see these opportunities with your eyes, you see them with your mind, and you have to start understanding how the personality of the stock is. There is a reason why this happens. And these stocks have been behaving like this for a long, long time. So, for example, if you see here Microsoft, it has a pattern, right? It has a support line, it has a resistance line. Right now, it's just about to get to the right price, $44. The moment that it gets to $44, guess what I'm going to do? I'm going to purchase, and I'm going to keep it until when? Until it reaches about 60 or 58, or possibly a little bit less. I'm not going to be that greedy. If it gets to 54, and I got it at 44 in a couple of months, is that a good profit? Yes, yes it is. Simple. So it can go from 43 to 49. It's basically the same way for you to understand it. It's like in the slopes. You go up, you go down. You go up, you go down. You go up, you go down. You learn the pattern, you know how to ski. You only have to avoid the black slopes unless you know what you're doing. But there's a lot of green slopes around the way that will still make you a profit. Could anybody, almost anybody, ski on a green slope? Yes. This is exactly how the stock market works. For example, here's another example, HTLD. What do they do? I don't know. If I want to find out, where do I go? I go to Yahoo Finance. So I have a trading range, and I wait for the stock to bounce over here when it is about 17, and I sell when it is about 22. Has been behaving like that for a while. So I just see it and I just do it. So basically you have bull patterns and you have bear patterns. And you have your trading range. You have your trading range, and you can always see how they're going to be behaving. Now there's a few things that I just want to explain you so that if you get confronted with it, you don't get scared. You're going to be finding channels. This software that I'm telling you about, Telechart, is going to help you create the channels so that you will be able to understand the behavior of the stocks. I tell you, the moment that you start doing this, you're going to stop playing stupid television games. You're going to stop watching The Simpsons. Trust me, I know that. I know that. This is just absolutely fantastic. Why? Because it's going to start making you money. For example, this is an 11th month channel. You can see that for 11 months the behavior of the stock has been very similarly. Now I was telling you what will happen if something really absolutely weird happens. This is an example of September 11th. Look at the company, United Airlines. What happened to the stock? Went big time down. How can you protect yourself if you have stocks like this? Very simple. You're going to start setting stops on your trades. So whenever you purchase a stock, you're going to put a stop loss. How does that work? So for example, I will say, okay, this is a resistance line. This is where I am supposed to buy. But over here, I'm going to tell the software, for example, if you go with Ameritrade or with E-Trade, you will tell the moment that the stock reaches 87, if it reaches 87, immediately sell my stock, even if I'm playing golf. So, for example, you have the possibilities of losing a little bit, but gaining quite a lot, and you are already insured that you're not going to be losing a lot of money. This is something that already the software trading online can be done, so your profits will always be protected. Is that cool or is that cool? Cool. Fantastic. So basically this is how the market direction goes. You have a bottom, you have an uptrend, you have a top, you have a downtrend. That's basically how stocks always behave. Now, very important. Do you want to score the highest? Do you want to make a win all the time? I don't think so. I think sometimes you lose, sometimes you win. The important thing is to try to minimize your risk. The more that you minimize your risk is the best. Never let the best that you can minimize your risks by simply putting stops into your sites and averaging that you lose less than you lose less and you make more, then it's not a problem. Once again, all of these sounded very difficult, but right now I'm sure that I'm already making your mind go very fast, and you can see that you can learn it yourself. As we were saying, never let the possibility of making a mistake keeping you from pursuing your dreams. The biggest secret on making money of the stock market is not to be right all the time, but to lose the least amount of money whenever you are wrong. Another big myth surrounding long-term investing. Long-term investing is never a good idea. Okay, it's never a good idea. Never ever fall in love with your investments. You buy, you sell. The strategy is buy and hold, not buy and keep. So you have, you sell, you have, you sell, you keep on observing, you keep on observing. Very good. If you have read horror stories of common people who have their lifetime savings lost in the recent stock market carnage, you would be wondering what really happened. Some of them have put their money in the best stocks, so where did they go wrong? I'll tell you where. Most of them held the stocks too long, blindly following their portfolio investment advisor and fund manager's favorite piece of advice: in the longer you hold these strong stocks, the higher your returns will be. It's very dangerous. Okay, now, how many of you have ever heard of stock splits? Because this is something that you're gonna, suddenly you say, oh my goodness, yesterday was selling for 20, now it's selling for 10. What happened? The stock splitted. Let me just explain you what this was. For example, this was Pfizer. This was in 1995. The price of the stock went too high for the investors to keep on investing. So Pfizer said, well, okay, instead of having one stock that is going to be $90, I'm going to give you two stocks that are going to be 45. Is that the same? Yes, it is, but now you have double the amount of shares. Now, what's interesting, whenever there's a stock split, normally the price of the stock is going to regain the normal price that it had before. Okay? So a stock split is usually done by companies that have seen their share price increase to levels that are either too high or are beyond the price levels of similar companies in their industry. The primary motive is to make shares seem to be more affordable to small investors, even though the underlying value of the company has not changed. Whenever you see there's going to split, guess what? What does that say? There's a great opportunity, right? So keep an eye for those splits. Also, there's, for example, reverse splits. What does that mean? It goes the other way around, right? So, for example, it was, let's say, 50, and now they give you 8 for 1. So actually, they will raise the price of a stock. It's very simple. You have one stock, they divide it into 4 different stocks. Is it the same? It's exactly the same. It's just the other way around. Now, how can you get started? Which I think is the question that you're asking yourself already. First of all, get yourself a month trial of TC2000. Great tool, super nice to play with. It's a lot of fun. You can do a little bit of paper trading. You can really have a great time. The moment that you feel confident, guess what? You can go with the big boys, open an account in Ameritrade or in E-Trade. I use Ameritrade. It's one of the friendliest ones. Okay? And you can start trading. Great fun. And guess what? You're going to be making quite a lot of money. So with this, I finished the day, and I hope that you have really enjoyed a lot and you have gotten a lot of information.